This is On the Charts with Nick Radge, your Australian stock market update, highlighting stocks on the move so that you can invest with confidence and success.
The information in this podcast is general advice only and does not take into account your personal situation. Please consider if it is appropriate to you and consult a licensed professional before making any investment decisions. The information provided is believed to be accurate at the time of recording.
Welcome to the On the Charts podcast, episode 212 for the week ending 30 June 2017. And this week also ends the first half of 2017. Year to date, the ASX has returned just 3.1% with dividends included, or just 1% in actual growth itself. This compares to an 8.25% return for US equities. And whilst the US has been making new all-time highs for most of the year, Australia continues to wallow some 16% below its all-time highs made back in 2007. Now, we retain a cautious near-term outlook on the Australian market, as recent highs have stalled against the major highs of 2015, and pattern progression points to a potential downside move. Our ASX trend strategies are in defensive mode, meaning no new positions will be initiated, and trailing stops on existing positions have been tightened up to protect some capital. The growth portfolio added 1.4% for the month of June and is currently only 65% invested. Now, next week in the US, we start with the July 4 holiday on the Tuesday and a half-day session on the Monday. So chances are we're not going to get too much direction here in Australia until after the Wednesday session in the US. The US Federal Reserve will release its minutes of its recent meeting on Wednesday. The S&P 500 lost 0.6% this week, but did have a heavy down session on Thursday, which tested a minor level of support around the 2400 level. Buyers did step in on the close, and that session finished up off the lows, which we view as quite a positive, at least for the time being. Nasdaq not so, finished down 2% for the week, posted an outside reversal week. Now, normally this is considered quite bearish, however, our research suggests otherwise, at least in the short term. That said, a few cracks are starting to appear in some of the larger tech stocks, with rotation out of the FANGs and into the financials. And at the other end of the scale, the small cap Russell 2000 was flat for the week and is actually showing pretty solid relative strength against the larger indices and is consolidating at its all-time highs. The Australian dollar advanced 2% this week and is now testing the upper side of a large symmetrical triangle that threatens to break to the upside. Now, symmetrical triangles are traditionally seen as continuation patterns, which would mean, at least in this case, we'd expect a downside break. However, again, our experience suggests that very large symmetrical triangles, or these formations, actually tend to reverse the trend, meaning an upward break. We saw an example of this back in late 2008, early 2009, after the currency plunged during the GFC. A large symmetrical triangle formed, threatening a continuation lower, yet broke to the upside and propelled the Aussie back through parity and onto 110. Scott Goddard, author of our global chart research area, has already initiated long positions for clients back at 75.30 in anticipation of an upside breakout. A few stocks of interest, starting with Macquarie Group. It remains just above a minor line of support and just below a major level of resistance. We see near-term risks from the pattern progression, namely as the move up over the last 12 months has been very choppy and suggests it's been a corrective move higher rather than a new trend. That said, if a significant push through the major resistance occurs, then our analysis will have to be invalidated, and we'll review the weekly and monthly timeframes to see where we go from there. That said, the large cap growth portfolio retains long positions from earlier this year in Macquarie. Now, a small cap stock on our radar at the moment is a cloud-based superannuation software company called Class 1, and it's got symbol CL1. The company has a market share of 23%, via its flagship product called Class Super. It's shown consistent growth through the last couple of years of 39% of sales and 54% of operating earnings. It continues to benefit from the growth in self-managed super funds in Australia and the structural shift of administrations to the cloud, cloud from desktop and non-specialized software. Analysts continue to see strong growth all the way through to 2021. Now, technically, the stock major high in late 2016 around the 420 mark and since slipped lower. But for most of the last 7 months, it's been trading in a basing formation with an upper boundary standing at around the 320 level. Long-term listeners know that we're pretty keen on these formations as they tend to be a precursor to a new trend. That said, we require momentum upside in order to initiate positions, as the risks are that this base building could continue for many more months and you just don't want your capital sitting there doing absolutely nothing. Now, I'll be delivering a talk on mean reversion strategies at Noosapalooza, which is about 3 weeks away. Mean reversion strategies tend toward more consistent returns and are able to compound capital at a much faster rate than cyclical or trend-style systems. They can also be quite profitable in bearish environments and during high periods of volatility. I personally trade 3 of them, 2 in the US, which both returned 2% and 5.8% respectively in June, and another in Australia, which returned 1.4% for the month. And we strongly recommend our members diversify across strategies to smooth the equity growth and take advantage of different time frames and market environments. Also at Noosapalooza, you'll have the chance to speak with about 8 of our mentor students, almost all of whom have designed, built, and now trade their own mean reversion systems for the exact reasons mentioned. There's still a few tickets available, and it's been a cracking winter so far in Noosa, with an average daily temperature of 21 degrees and a water temperature of 23 degrees. So to lock in your ticket, just head over to thechartist.com.au, select the Noosapalooza tab on the navigation bar and lock in your ticket. My name's Nick Radge. Have a great weekend, and I'll see you on the charts next week.
On the Charts with Nick Radge, brought to you by The Chartist. Join Nick and the team at Noosapalooza Trading and Investment Conference, 20th and 21st of July in beautiful Noosa, Queensland. Visit thechartist.com.au and click on Noosapalooza in the menu for details.